Good afternoon. This is Tom Alexander. It is Saturday, March 25th. It is 1:48 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly video update, addendum to the weekly written report that I send out every week. If you are finding me and you're not receiving that written report and you would like to receive it, just send me an email to tom@alexandertrading.com. I will put you on the list. It's free and you'll get the report each week, and I'll send you the written report from this week as well. Also, if you would like the video, if you would subscribe to the channel, comments, questions are respond to all comments. I'll respond to all questions. It helps me grow the channel, so I would appreciate your help in that regard. Okay, let's talk about the markets. The markets are all over the place. And when I say markets, it's not just the stock market. Everything is volatile. Everything is tethered at the moment to the interpretations of Fed policy. So that's the world we're in at the moment, and it is driving everything. The indices are all over the place. There's really, from a intermediate term perspective, they're between levels. There's no big edge here going long or going short. It's hard to identify some sort of great opportunity because the markets are really not at inflection points. They're between levels. So let's take a look at the chart. So I'm going to start with the S&P. Now, the S&P closed on Friday. We had a wide range up day on Friday, and we closed really right in the middle of between two intermediate to longer term levels, that being the February high and then the March, actually the January lows. We had this balance area that formed down here. Actually, it'd be helpful if you could see my screen, wouldn't it? Now, here you go. So you can see we're between these two important levels, the high of February and really the low from the end of last year prior to that balance area that formed just above this low. So we're dead in the middle. We're also in the middle of the range from last week. So you don't get more neutral than we are now. I will point out we're above this 200-day moving average that all the institutions fixate on and trigger a lot of trade strategies. But we've been trading up and down across that moving average now for almost 2 weeks, and that continues. Eventually, we need to see strength above 40 or below 39.09, and that will help us. But as of the close on Friday, we're in the middle of nowhere in the S&P. All right, let's take a look at the Russell. Now, in a vacuum, this would be a very bullish looking chart because the Russell broke to the downside out of a balance area on Thursday, made a lower low and reversed sharply on Friday. This would typically imply a false breakout trade underway and acceleration through this range. But because things are so weird now, I don't necessarily trust that. There has to be some sort of follow through. Certainly now in all the indices, I will say this, Friday's lows are very, very important. By the way, I have weekly charts that I think are relevant and make the case that display how neutral we are as well. And that's in the written report. So if you're not getting that and you want to get it, let me know. tom@alexandertrading.com. Okay, let's look at the Dow. We'll look at the NDX last. And the Dow is, as I put in the report, the poster child for being in the middle of nowhere in terms of daily time frame and weekly time frame. Now we'll look at the outlier, the flight to safety index, apparently in the NDX. And the NDX is in an increasingly mature balance area. It's in a balance area of 4 days, and the critical downside level is going to be the low of the 22nd and the high of the 22nd. That was a very wide range day, and it basically encompassed most of the range of the NDX from last week. This is the profile view of the last 3 days trade in the NDX, in the NQ. This is the futures contract. And it is that perfect market profile, Gaussian looking shape that everybody associates with market profile. This is where we closed on Friday. Now, a close above outside the upper tail or below the lower tail in this market has to be respected. This is the high volume node. So keep an eye on this next week. This is something we'll be watching closely. Okay, let's move over to, let's take a look at the internals. And this is the SPX, this is breadth. The red is a 10-day moving average of NYSE advancing issues. The green is a 5-day moving average of advancing issues, and then the histogram is breadth. The bottom line here is that there's no extreme here. There's not particularly useful information. This can go either way. There's really nothing helpful here at this time. Okay, VIX. The thing I'll point out about VIX is that we have gone a long time now without a 30 VIX. But we've also, I think we've had 11 consecutive sessions with VIX above 20 also. So VIX is sort of stuck in a mildly elevated state without really going to an extreme. Now, if we do resume a downtrend next week, VIX will very likely spike. If we resume the uptrend, VIX will very likely come in. It's coincident, not causative. Let's see, what else can we show? Oh, I want to show this. This is 30-minute breadth. This is the SPX, and this is a view. This is a chart I lean on very heavily to make trade decisions really in all time frames. Now, there are a few things about this chart. We're in an uptrend. We are making higher highs and higher lows. We took this pivot out right here on Friday, but bungee jumped back as we sort of did the grind higher. We'll see how real this was in Globex Sunday night. I'm suspicious that this is real, but again, price action will dictate and will determine that. But you've had this manic panic pattern going on now since really the middle of March, where you get this big move up and expansion in breadth. It immediately collapses. You get this big contraction in breadth, then you get a upside move, expansion, contraction, expansion, contraction, and this has been going on. There's been no real sustained up move or down move for a while, and that's reflected in the price charts. So the bottom line going into Globex Sunday evening and next week trade is that things are up in the air. Watch these levels on the daily chart. We have this wildly disparate trade among and between the indices, in particular between the Russell and the NDX. And I understand they're two different indexes. They're dominated by different sectors. The Russell has the heavy influence of the banks. The NDX is technology, but in healthy trends, uptrends, you're not going to have this disparity. So something has to give there. You're going to have the NDX come in, or you're going to have the Russell begin to play some catch up. So we'll see what happens next week, guys. Have a wonderful remaining weekend, and I'll talk with you again soon.